FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And welcome. You are listening to the Financial Survival Network. It's Kerry Lutz. And hey, well, we've got Danielle Park on with us now. And are we seeing a reverse Black Swan in energy? That's really the question. And Danielle is with us now to answer it. Hello, Danielle.
Hello, Kerry. Happy November.
Oh, yeah. Hey, November is here. We made it through October amazingly enough. And, well, hey, October was a little wake-up call, but now we're back to record stock prices and everything's fine, right?
Well, for all the recovery, and certainly in a lot of the major markets that I follow, in the Canadian market, the Aussies, the New Zealand, the emerging markets, all that, you had a rebound of some sort in the last week or so of October, but they didn't reclaim anywhere near the previous high, and they've been declining again the past few days. So I think it was just sort of, so far, it seems to have been sort of a classic, interim rally in the midst of a cyclical decline that started in June. Things are off significantly from their June high. And we're seeing, really a collapse in some things like the commodity sector again. The Canadian dollar is now back to where it was in 2005. Quite amazing. So all the people that were factoring in the idea of insatiable demand for global economy, for global commodities, and spiking inflation are having to come to terms very slowly, I might add, because it's hard for them to admit and accept, but very slowly with the shock that prices are going down, not up. And I think that's what I find to be, there's been a lot of conversation about what would be a shock to the global system where people would have to recognize that asset prices that had been juiced on QE did not reflect the demand story in the world and real, sales growth, for example, of companies. What would be a shock? And some had said, well, there could be a pandemic like in Ebola. There could be, Middle East crisis. Well, when they said that, Kerry, I'd suggest to you they were thinking of a spike in oil and energy prices. And what I'm saying is this Black Swan, this particular energy crisis is actually plummeting prices, which very few people are prepared for because they weren't thinking that that was a potential, outcome. I find that the popular culture today is so inundated with the idea of inflation, not deflation, of rising prices and insatiable global demand, rather than in the idea of deflation and weakening global demand. Like aging population, less spending power in households, debt overhang. These things are mean reverting consumption back down after a period of peak consumption in the credit bubble. So I think that's the part that, that I'm watching very carefully, because it seems to me to be the most dominant force on planet Earth today. And all the sales side miss it because they're all paid to sell stuff and promise it's going to go up in value. What they don't see is the trends when it's very likely to go down in value for a sustained period. And yet there's phenomenal opportunity in that, if you can just see it, Kerry.
Yeah, well, and everybody was assuming, right, that China was just going to keep growing and growing and growing, and, that somehow it was going to be exempt from all these economic forces taking place, and that didn't work out too well either, did it?
Well, and there's another remarkable thing, Kerry. People heard 1.3 billion and lost their mind. The population scope and scale in China is remarkably large, no question. But at some point, you have to look at the dynamics of the population. And so we know they've had the one-child policy for several decades. We know that basically just demolished their demographic story. We know they're a rapidly aging population now. And we knew from cash flows, from capital flows in the world, that the insatiable demand in China was primarily driven from insatiable demand in the West for goods on consumer credit. And so when you watched that, when you saw that the average household income in China was still $6,500 a year, okay, compared to, the statistics in the West of like $50,000 a year of household income. I mean, the relative change or the relative impact of our spending made such a huge difference. And so people were not understanding how much the Western credit bubble was driving the demand for Chinese exports. They thought that the demand in China was coming from those 1.3 billion all moving to cities. Well, actually, when you look at what's happened since 2008, Kerry, so the global credit bubble burst, China's exports plunged. Suddenly, they couldn't find demand to save themselves. And the government said, just as we did in Canada, by the way, just as they did in Australia, I know, we'll just go to the domestic economy. We'll stimulate consumer demand in the domestic economy. We'll lower rates. We'll get our households to start spending. Well, they tried to do that. And what happened was Chinese people basically upgraded their housing. So the ones who were living in the cities were living in very subpar accommodation, a lot of them. And so they took the opportunity of cheap money from the government to try and upgrade to nicer apartments, whether that be rental or whether that be to actually get in the property ladder, so to speak. So they upgraded housing. But that comes to an end too, just as it has in Canada. At some point, just as you guys did in 2006, at some point, everybody's already got granite counters here, not in China, but you've already, whatever your equivalent of opulence is in a regular household, you've already upgraded. You're already fairly comfortable, and you don't need to keep spending at that level, and nor can you, because you're using debt to do it. So I think, what people again missed is that China would go into an inevitable period of consolidation and slowdown. And that's been happening. And we think that that's going to continue for at least another decade. So now you got to find a new, story of insatiable demand in the world. And people will look to countries like Africa as an example, or somewhere where you have a lot of young population. And I have no doubt that that will be a boom center in years to come. But we are so far from that stepping in right now. They don't have the infrastructure, the strength in the local communities or anything to get people really on that consumption grid yet. So we're a long way away from that. So we've got this demographic story playing out in Japan. No matter what the central bank does, they keep trying to stimulate demand when all people want to do is spend less and, exist to the end of their lifetimes. And they live a long time in Japan. So, but at some point, I think the most damaging thing I hear people say right now, it drives me nuts, is they talk about how the problem is that the Europeans aren't stepping in with more fiscal stimulus, and that's the problem. What's going on in Europe, or that Japan hasn't done enough on stimulus, and that's what's wrong in Japan. That is like starting a book in the 8th chapter of 10 and concluding, that the story. The problem with what happened in all those countries is debt. People spent their brains out, governments, households, and corporations spent their brains out on debt, and no one wanted to admit that required a period of mean reversion of probably a couple of decades as debt gets worked back down and savings get back up. And during that period, you got slow growth. That's what it is, folks.
Yeah. And, it's interesting because if you look at the Chinese official government statistics, their GDP only went down to 7.5 last quarter. This quarter, it's at 7.25, but nobody believes those things, right? Nobody's believing it.
And it's not backed up by any of the things that we can actually objectively measure, like consumption of commodities, not stockpiling, consumption, iron ore usage, electricity usage. They're also having their housing market is beginning to deflate over there. And let's not forget that their stock market, Kerry, is still very, hasn't really gone anywhere now for more than 15 years. When you look at relative value, it went to that big peak in 2006. index crashed 72% and has largely trended sideways ever since. See, that's what happens after these very big bubble periods. It's what happened in Japan. The housing market crashed and trended sideways. You've had, the same thing with their stock market. When it peaked in '89 on the massive credit bubble, despite repetitive interventions from central banks of this policy and that, essentially you get a pop up and then you get a mean reversion back to a lower low. And that's been going on there now for years. And so no one should be surprised that that keeps happening in the rest of the Western world. It's like a kamikaze mission has gone, full global, right? like we said, I remember this, 15 years ago, talking about what happened in Japan in the credit bubble and the burst, and how the problem was that their pride got in the way, right? They weren't allowed to admit failure and admit they'd done things wrong and write off debts and revitalize the banking sector by letting bad ones go and all that. But think about that. It's like the rest of the world's done the same thing since, right? And we used to say it was, it was a Japanese mentality thing. Like they just couldn't, couldn't face the shame of it. Well, what's the excuse then for everybody else? And where is capitalism in all this that says, hey, the way we have strength is by admitting mistakes, by admit, repent, reform, recover. That's how we clean the system, and that's how you end up with strength again. So I think we got to I'm hoping that we're at a tipping point where central banks are no longer seen as heroes and wizards, and people start refocusing on what's realistic demand in the world. Let's allow some prices to clear. So if we got a glut in energy prices right now, if we've got a glut in housing or a glut in various domestic sectors, financial sector, for example, we have a glut of financial sector. Let's let it clean itself out. Don't prop it up. Don't try and keep asset prices where they ought not to be. Let that stuff clean out, and then you get a reset button, and that's exciting.
Yeah, well, it's definitely needed because, look, we can't go on the way we were going on. I mean, that's just absurd and unsustainable and out and out destructive. As we've seen, we keep getting all these bubbles, and maybe, just maybe, we can de-emphasize central banks as not the be-all and the end-all and the cure for everything that ails an economy. The over-reliance on central banking policies and then totally ignoring fiscal discipline, fiscal policy, right? In the U.S., there is no fiscal policy anymore. They just do whatever they want, and nobody worries about it. The Congress, the president, Republican, Democrat, they just don't seem to care about perpetual deficits, and none of that matters at all.
I've come to this pretty extreme sort of thought in the last little bit, and I'm not sure how it plays out exactly, but I think that we may have run to the end of corporatocracy, if you think of it that way, where, we have this legal model, which is one about limiting liability, about spreading risk, about having passive investors in an active pursuit. And that's the basis of the corporation, right? It was to encourage people to take risk because they could spread it with more people than just, a couple of partners or founders. So in its inception, that has a positive effect on some enterprises undertaken in the society, for sure. But I think we've run to the other extreme of it now, whereas you have corporations who are not responsible for anything, who get off the hook for everything, who take all the benefits for a few and leave everybody out of the equation. If you look at, in the last 12 months, you had S&P earnings up 8%. On the back of all these creative accounting things, which they're allowed to do, loopholes and setting aside fair market accounting and buying back shares, everything you can to get your earnings up. But at the same time, sales growth rose just 3.5%. And that, I think, is the great equalizer here. At some point, the system becomes so skewed in favor of, the corporation, the publicly traded corporation, and the executives in control of it, that they lose complete connection with customers. who are actually driving the bus. And, the customers, you've got to find the price point where your customers can come along with you, where people can afford your product again. And that's the problem with these bubbles. They keep making things, trying to push prices up and keep them artificially high. How? By making creative accounting, right? By financial engineering, by saying, you don't need anything down and you can extend a car loan over 9 years without any interest and just pay it. But eventually you've already done all that, guys, right? In the US, I saw the latest Fannie and Freddie idea was, let's go back to just a 3% down payment because we got to get more people to buy houses. That's the opposite of what you need to do, right? What really needs to happen is people who don't have a down payment, like a good down payment, who don't have a good job, who have too much debt and don't have any savings, shouldn't be buying houses. That's actually the correct thing. But because there's so much obsession with, we got to keep sales, sales constantly going up, people don't want to have the healing phase, which is the retrenchment and building strength for the future phase. So, I just think that they don't have enough magic tricks to deny the force of gravity inevitably. And I think that that's why you get mean reversion, and it comes quickly. Like everybody's talking about the plunge in oil and energy prices recently, right? But that's because it became such a manipulated, over-levered, controlled price fixing. I mean, look at the JP Morgan news again today, Kerry. The banks, the corporations and the executives have been hiding behind them like cowards, reaping benefits, manipulating every kind of criminal activity justified because you can spend billions and billions on legal fees. They get away with everything. And that has now, I think, basically been the undoing of them. Because at some point, as I say, they can't pull rabbits out of hats if they don't have any, real wage growth in the economy. If people are over-levered, if they've already bought everything on credit for the next 10 years, you're out of customers. And now it's back to, darn, we have to slash overhead again. We have to slash workforce again. Well, now you're just making less customers. So I'm saying that they are correct that they have to break up some of these large conglomerates and downsize expenses. But also that means the asset prices that have unduly levitated come back down too. And that's how we get affordability back into the mainstream.
And let's go back and look at one other thing. You're talking about corporatism. Before that, all of these companies on Wall Street were partnerships, and the partners' capital was on the line every day in the company, and they were better places back then. They didn't play games with earnings, and they weren't always in search of new markets that weren't necessarily productive for society and eventually would be destructive for society and the company. There was a built-in social responsibility in that partnership form of ownership that there just is not in publicly traded corporations.
Right.
This diffusion of responsibility where the management owns very few shares of the company and basically are out to game earnings, game the markets, and maximize their own take. Really difficult to accomplish in a partnership environment where, believe it or not, you still have this in law firms, and say whatever you like about lawyers, you're invited to become a partner. And if they don't like you for whatever reason, and some of them are questionable, but if you're not in accord with their values, if you don't play by the same rules, you don't become a partner in that law firm. And, it's imperfect for sure. But
it remains, there's some accountability left. And, this is what I've learned about human beings. We need to be accountable on a daily basis for our choices. When we are not, we see this with our kids, we see it with people around us. When we are not, when we're bailed out or saved, or, someone keeps adding money to our bank account every time we get in crisis, or someone extends us credit. I mean, you hear these incredibly ridiculous commercials all the time. I don't know about in the US so much at the minute, but in Canada, talking about if you have terrible credit, not a problem. Don't worry. It is a problem. If you have terrible credit, you should not be able to borrow money. That is a self-correcting accountability mechanism that has kept capitalism somewhat honest. And what people are going on about now, about the risk takers being these brave captains of industry, is an absolute farce, because truth be known, they never started anything, most of them. They came into something that was in process. They weren't the founders of the firms. They didn't suffer through with no income for years to get the thing started. They come in midstream, they're paid like rock stars. They have no respect for the entity or the people who basically got it started, or all the risk that they faced to do that. And they've been in this marriage with their Congress the past few years, where they are so confident that the government has got their back all the time that they couldn't even be described as brave people. They're basically cowards, in my view, who take tons of money for doing very little and adding no value. In fact, the opposite, figuring out ways to degrade everybody so that they can goose some short-term advantage. And so we have to, I think, just, come full circle and see that kind of state-endorsed or state-underwritten risk-taking is the end of everything good. It needs to just stop. You want to be a strong player, stand on your own feet, prove you can risk manage by not blowing up. Or if you do blow up, oops, guess what? That's how it goes, folks. You blew up. Sorry, you weren't doing the job properly. Better luck next time. So that's why we have, what encourages me is this has been a crazy nutso period for sure, really since the mid-'80s, Greenspan and company and all the crazy stuff that's happened. But if you look at it in the big picture of humanity, it's been a pretty short little blip. Lessons can be taken from this, and I think the catharsis of a washout here, and again, back to what's a shock on the system right now, Kerry. It's great that the U.S. has become more energy independent, and that now we've got this war going on from the Saudis trying to squeeze some of the new technologies out in the West by saying, we can keep prices falling and we can tolerate it longer than you guys and all that. But the fact of the matter is that it's not just a supply shock, it's a demand shock. It's both things. Okay. And the reason that that's good is that it helps real consumers to afford their bills again. So lower energy cost is a positive for the real working guy and gal. So is lower food prices. So the fact we had bumper crops all over the world helps to bring things that matter back down to reasonable levels. But it also has been the one core of strength in the U.S. economy, if you look at the last few years. So the fact that energy prices are coming down and tax revenues will follow it lower for many governments, I think we're going to come to a crisis point again in terms of cash flow here. Again, there won't be money to bail everyone out this time. So I think it'll be our chance to let the mechanism clean. And people are worried about the working guy. And I say, listen, working people have already had their balance sheet clubbed and their spending power emaciated for the past several years. This next phase is going to be cleaning out those who are highly levered, who have taken free money and thought they were gods, and who have no actual skills management and risk and how to run a company. And I think we get some cleaning out of that sector, we'll all be better off.
Yeah, I would call this one the great comeuppance. Danielle, on that, we got to go. So find Danielle's work at jugglingdynamite.com, and you can always find the link on financialsurvivalnetwork.com. Don't forget, sign up for our newsletters. Danielle, we'll talk to you in a couple weeks.
Okay, Kerry, thanks.
FSN Radio. It's all about what's next.
Every week, the show is growing. Would you like to be a part of it? Then go to clubfsn.com and help support us with $1, $2, $5, or $10 a month and get a host of premium content with newsletters dropped into your mailbox, free books, private audio clips, webinars, and much more. Then join clubfsn.com. If you want to get ahead of the trend and ensure your family's financial security before it's too late, go to clubfsn.com and sign up.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.